Today's episode is brought to you by Dorrington Plumbing, Gas and Electrical, and they provide quality-focused specialists for both residential and commercial plumbing, gas and electrical services. They've been doing this since 1995 and have built up a substantial reputation within the sector. If you're interested in these services, head to www.dorringtonplumbing.com.au.
Hello, I'm Ben Kosterich, and this is the Market Bull podcast. It's been a while, and I'm happy to say I've got Dr. Marc Faber back on the show, who is the founder and editor of the Gloom Boom Doom Report, which is an in-depth economic and financial publication which highlights unusual investment opportunities around the world. Now, when I last spoke with you, Mark, it would have been around the middle of 2024. There was that talk of US elections and general political cycles were at the top of everyone's tongue, and we're looking at the investment philosophy and how it was pivoting post-COVID and these, interventions from government that we're just talking about. But firstly, how have you been? And what is your current sort of take on the current ethos and state of global markets?
Thank you for asking. I'm fine. We had in the fall, after we carried our interview, floods here in Chiang so our house and my office were flooded for a few days. No, but no, no major health hazard, except some crabs in the house and fishes. Anyway, and then the business was okay in the sense that the business is not good, especially not in Thailand. Thailand is in the sort of a recession for real incomes, and people are suffering because the business is not very good at the present time. It hasn't been good for a while, and the cost of living is going up and so forth. So people are not particularly happy. But, the country is a very wealthy country in terms of agriculture. So you never see starvation in Thailand. I mean, people have enough to eat. And also the religion is very much a religion of sharing goods. And it's an interesting country to visit because the economists all over the world, they say Thailand is a failed state, but it's very popular with tourists. So I suppose that the failed state definition by Westerners is a definition that is made up by government officials, whereas people seem to be very happy to go on a holiday into a failed state and actually retire in a failed state. So it's quite a funny situation. But the global economy I have maintained already since last summer is basically in recession. Now, everything in economics has to be defined. What do you mean? Because the government can show GDP growth, and they can show GDP growth in real terms, depending how they measure the rate of inflation. Say our economy expands by 5%, and the cost of living increases, say, what we call commonly inflation, is 8%, then in real terms, 5% nominal growth, 8% inflation, then in real terms, inflation would have, the economy would have contracted by, say, 3%. But the government can say, oh, inflation is only, say, 2%. And then with the 5% nominal rate of growth, they can claim the economy has been growing at 3% per annum. So it's very difficult to know exactly what is happening in the economy unless you have very reliable statistics. Now the government says, oh, we had to make adjustments to the rate of inflation because of this and because of that. But private economists who use the figures that were commonly available in the 60s and 70s, they have an inflation rate of over 10% per annum at the present time. So you understand, when we talk about GDP growth, it's a bad way of measure an economy. We should actually measure, does the majority of people improve its standard of living, or does the majority of the population live in worse economic conditions than, say, 3 years ago? That is the question. And to that question, the answer is, for most people in this world, in the Western world, in Australia and in Canada and the US and all of Western Europe, most people, say 70%, their standards of living is going down because the cost of living is going up more than the salaries.
Mm.
And massively so. Where, say, the 1% in a society, the rich people, they have moved forward because their assets through money printing have appreciated a lot. So, when you ask about the economy, we have to specify the economy of whom? The
Yeah.
economy of the 1% or 0.1%. That has improved. But the majority of people who have no assets or little assets, and these assets did not appreciate, say, people who sit on commercial properties. Commercial properties haven't gone up, they've gone down in the last 5 years. These people have lost out.
Mm. And when you're talking about this, there's always that discussion, at least in Western worlds, the gap between the low to medium to high income earners. The medium household is the one that's sort of getting pulled further down as the rich get further ahead, and that spread sort of continues to increase. Is there any sort of strategy, if not solution, to curbing that? I mean, that's not a question or answer that can be very quickly analyzed, but do you feel that going forward, is there really any objective, governments can say it, but is there really any factual proof that they're working on these strategies to make it easier for people and increase or decrease the cost of living pressures that I think everyone is noticing in the West?
It's very simple. Just look at who sits in governments in the world and look at who controls the governments. Say, Wall Street is probably aware of this, that, the wealth inequality has gone up. But of course, because they belong to the 1%, they will never criticize the central bank for printing money. And this growing divergence between income received by the rich and income received by the middle class, the lower middle class, and the poor, that has widened. But they're not going to do something about it. You understand? Which would imply you have to tax them more heavily and so forth. And I'm not sure it would help. But clearly, what would help would be less money printing. But one thing you have to realize in this world, the influential people are all people with money. And they don't like a restrictive monetary policy. They're going to print money. It's like Trump. He understands to some extent that the money printing will lead to higher inflation. But all his friends are people like Musk. Do you think that Musk likes when his stock drops 50% and his net worth goes down by 50%? So he is also behind the view that the Federal Reserve should print money or cut interest rates. You understand? So, there is an economist, Galbraith, who used to, he said that people of privilege are very seldom prepared to give up these privileges. And Wall Street isn't prepared to give up the bonuses and so forth, believe me.
So do you
That
feel
would be the
then?
day when Wall Street says, we're going to do something for America. We're going to give up our bonuses. That
Yeah,
day
it
is
sounds
not
very
going to happen
comical.
in my
No,
lifetime.
no, I don't even think in my lifetime either, really. It's the sort of the beast of Wall Street that we all hear. But I mean, hearing that, do you have an assumption or even an inclination that you feel that interest rates and reserve banks are going to pull those back? And I know the constant chat is there is this impending debt that countries are continuously taking on, but there's always this money printing that's going to happen. Do you feel that that is just going to continue to go, and that the can just keeps getting kicked further and further down the line? Because what's the thing about debt, especially big debt, it's just never paid off really to an extent, and that the West and a lot of these other countries are just going to continuously print, but potentially interest rates might still come down as this constant sort of battle, so to speak.
I want to tell you, in the 1980s, there was a group of people, they were the strategists at Merrill Lynch in New York. And they went on their own and they published very interesting research reports, very colorful and easy to read and easy to understand. The firm was called Salvixon Associates. In any case, they already argued in the early 80s that the debt growth in America was unsustainable. And now we're 40 years later.
And it keeps going.
And I mean, I also thought in the 80s, this debt growth is going to be a big problem. But up to now, they've been able to keep the machine going and postpone the major problem. Now, I happen to think that the environment has changed because we were in an environment of declining interest rates 1981 to 2020. Now, we seem to be in an environment of increasing interest rates. And if interest rates go up, when the Fed tries to monetize, in other words, print money, or lower interest rates early, or too early, or prematurely, the market, the bond market reacts. And what is striking in the current environment is that although everybody can see that the economy is weakening, the bond market hasn't really rallied much. It may still rally if the economy really gets weak, but up to now, the bond market hasn't performed well. And I think that this will have an impact on the valuation of stocks. I mean, I wrote at Christmas a report that Trump top. In other words, that Trump, the inauguration of Trump marked the peak in the market. It's still my view.
Is there typically in the US, though, historically a bull run up until an election decision and then a subsequent usual typical decline in stocks to an extent? And almost this is a historic, I guess, pattern that's repeated. I mean, the stocks, they're constantly outperforming a lot of areas, or at least it depends on what stocks you're in, and AI has been an interesting one. We'll go down there. But I mean, speaking of that, the stock markets, you feel now that there's probably going to be a substantial pullback, or what are your sort of takes in, I shouldn't say a whole stock market, because there's certain assets and commodities like precious metals that are skyrocketing in some
I'm glad
domains.
you're asking. My view is that we had, you know, the viciousness of monetary inflation is that it goes into different sectors of the economy and different assets at different times. It's not that all prices are lifted equally and go up in the same dimension or same relation. No, what happens for 5 years, you may have a bull market in gold, and for 5 years, you may have a bull market in commodities, or for 5 years, wages may go up, or for 5 years, I don't know, travel
Property
costs
or
may go up, and so on. It's all very uneven. But it's a tax on mostly poor people. And I don't want to go into the explanation here because it takes a little while to explain why. But basically, it's a very welcome tax by the rich because during monetary inflation, the rich benefit in general, not the ones that own commercial properties, but the ones that own commercial properties, they usually also own stocks and they own bonds and they own residential and so forth, and collectibles, paintings and other collectibles. Anyway, the recent bout of inflation has been one, and I distinguish here between asset inflation and consumer price inflation. Consumer price inflation is when your grocery prices go up or your insurance costs go up. The consumer price inflation is mostly concentrated in necessities that everybody needs to buy, whereas asset prices can be stocks or bonds or a currency or the price of wheat or sugar or coffee or cocoa. Like 2 years ago, cocoa went up. Last year, coffee was up, and so on. Anyway, we have long-term cycles. I believe we were in a cycle of asset inflation 1980-82 for stocks and bonds, mostly financial assets in the world. They went up, and we are in a top area for financial assets and assets in general. I think from here on, the money printing will not lift asset prices. They may lift them in nominal terms. In other words, they may go up or not go down. But like between 1966 and 1982 in the US, stocks went down in real terms, inflation adjusted. In other words, stocks didn't go down, but because inflation was at between 6 and 15%, in the real terms, inflation adjusted, stocks dropped. And I think that from here on, stocks will lose value relative to precious metals, as an example.
And then just speaking more of bubbles, really quintessential, gold has been at the forefront, and I think we can all agree that it's had a tremendous run. Gold typically becomes a safe haven asset in times of I guess instability and tensions, and the other precious metals such as silver, and I've seen you written about that as well. If it's that potentially rising over the next course of this year into the next year, I mean, what other sorts of investments or areas are you looking at? I've heard you talk about commercial property being heavily smashed, but potentially on the turnaround in comparison to residential property. Where do you see the next boom, if not the counterbalance, the next tide that gets risen over the next 6 to 12 months?
Yes, this is a good question, because whereas I believe that the US market is kind of in a top formation and bonds have definitely topped out. I mean, long-term bonds, the interest on the 10 years is up from 0.57% in May 2020 to now over 4%. And it was over 5%. So the long-term trend is upward for interest rates. And I think the long-term trend for stocks is down in the US. But in emerging markets and in Europe, we've been in a bear market, for the last 10 years, say in Hong Kong. So I think that some stocks in China, Hong Kong, and in Indochina are relatively attractive. The valuations have come down significantly, and I can buy stocks, say, at a discount of 60-70% to the asset value. Now, I understand the asset value will have to be written down, but not by 70%. Say, we are, the asset value is 100 today. The stock price is 30. So we are at a discount of 70%. I think the asset value will have to be depreciated by, say, 40%. So we're at 60, but we're still at 30 on the net asset, on the stock price. So I think the stock price may go up, even though the valuation is adjusted to the downside of many of these companies. That would be my view. Or my view would be that everything goes down, but emerging markets and Europe goes down less than the US. I think the US is still very vulnerable.
And then, I mean, going forward, is that particularly where your investment philosophy has been shifting? Has this been something you've been acting on over the course of the last few months? I mean, from your personal sort of philosophy, how have you been looking at this? I've seen you write about Brazil and some of the performances in some of the banks over there, but you know, the cloud of, oh, it's Brazil, and people not maybe wanting to invest there is always something that I guess it's the psychological disruption for most people that want to make decisions. But how is that impacting? If not, it's just an everyday of business for yourself. But how are you adjusting and looking at this?
Look, at the end of 2021, I wrote a report and I highlighted how Turkish stocks were very inexpensive because obviously the currency had been collapsing and stocks hadn't moved up. So in dollar terms, stocks had become very, very cheap. And I wrote that investors who can assume a certain amount of risk should buy Turkish stocks. Then I got one email after the other from people in Turkey. How could I recommend Turkish stocks? The situation was very bad and this and that. So 2 years ago, we started to write about Argentina. Same story. Everybody told me it's a hopeless situation and so forth. And then more than a year ago, Milei got elected. And to be fair to him, he's performed up to now. I don't know about the future.
Yeah.
These type of people tend to mess up with their interventions. But up to now, he's performed the miracles. Miracles. The stock market has more than doubled in dollar terms. And many of our stocks that we mentioned at that time, 18 months ago, they've gone up 5 times. So I'm telling you, when stocks are cheap or when a commodity is cheap, you will find 1,000 people who will tell you why you shouldn't buy them. And that's why they're cheap.
Well, that's the quintessential contrarian view, yes.
And you argue with people about Nvidia and Meta and Netflix and so on. You have 1 million people that will tell you why you should buy them. That's why they're expensive. I would buy things that are cheap. You understand? You have to, in investments, if you want to make big money, you have to buy things when nobody wants them, because that is the sign, the ultimate sign that they're neglected and inexpensive.
So then, as you were saying before, I can't imagine Europe is that exact market then, but what emerging markets are potentially on your radar then now? Is there any parts of Africa? I think you were saying Southeast Asia or Hong Kong, or where is
Southeast Asia? But quite frankly, I think the problem is it's difficult to execute. But I think people should buy Russian stocks.
Fair.
I mean, the
Any
risk.
thoughts?
I'm talking about. I'm talking about risk reward.
Yeah.
If if a peace comes about in Ukraine, whereby I have serious reservation that this will happen, because too many people make too much money out of the war in Ukraine. And too many people who are close to the US administration and to people at the top who are all the time in Davos at the World Economic Forum. That is the reason we have wars. Too many people make money. You think the ordinary Australian wants to go and fight the war in Ukraine? Nobody. You think
No.
the Hong Kong Chinese want to fight the war in Ukraine? You think the Swiss, the French, who sit in the bistro in the morning already with their wine and the cassis,
Yeah, it's a fair point.
Greeks with their ouzo. You think they want all to go fight in Ukraine? No, but there's big money, big money, including for Mr. Trump.
The fascination, and I have no idea what, not really sitting at the table for those conversations. And I think we're all hoping that the war ends. War's not good for anyone, but as you said, there's people that make a lot of money in war, and that's a terrible truth of that whole situation. Depending on that and how it's controlled, that might influence where the next sort of handful of months goes. But it'd be remiss of me not to ask you about currencies, because I know we briefly touched on that previously. And there's been, I remember when the war in Ukraine started, there was lots of restrictions on Russia and the currency, and the ruble was then backed by gold, and there was currency bounces, and there's this constant discussion about BRICS versus the USD or the US dollar, and who's going to have the stable currency going forward. What are your sort of thoughts on the currency markets and what is really happening? Because I can say from an Australian point of view, our dollar isn't doing too well. I think we're just holding above some form of resistance, but we've felt it in the Australian terms. But what's your takes on currencies, and in particular, the BRICS versus the West, or the BRICS versus the US dollar?
Well, my view has been, and I think I mentioned it already at that time when we spoke last summer, that the US dollar was grossly overvalued. I mean, I think that the Australian dollar is still somewhat expensive, because I remember when I went the first time to Australia in 1973, Australia was very inexpensive. And now I find many prices in Australia to be more expensive than in the US. So I don't think it's a bargain. And the economic outlook is not particularly enticing. But what I want to say, my view is, what may happen in the US is the government will try to support the stock market, that it doesn't go down. So they'll make liquidity available. What it will do, and what people think it will do, is that it will weaken the dollar, the US dollar. And the US dollar is down 10% against the Swiss franc this year alone, and also against the yen, and so forth. So the dollar has begun to weaken. And I think this is a long-term trend that may last 10, 20 years. You understand? Now, someone may come to me and says, Mark, we agree with you that the dollar is going to weaken, but we don't see how the euro would rally substantially because of its quality. The euro has a very low quality. And the head of the ECB is, or has to be, one of the worst bureaucrats in the whole world, Miss Lagarde. She's clueless about economics. At least we can say that Jerome Powell, he's read maybe one or two economic books that are of no relevance because they were written by Bernanke or by Greenspan or modern economists. But Lagarde has read nothing.
Mm.
And she runs the ECB. But that aside, I would say, yes, I agree that the other currencies are not much better than the US dollar. But that's why my view is that anyone who doesn't own some precious metals is irresponsible, because at least precious metals are a proven store of value.
Yeah.
Now, you may say the gold price is high. I could argue, no, the gold price is the same. What has gone down is the purchasing power of the US dollar and the purchasing power of the Australian dollar, and so forth. So it's very difficult to say, amidst the monetary inflation, what is overvalued and what is actually still cheap. I could argue gold is expensive if I compare it to, say, the price of oil or the price of wheat or the price of corn. But someone could say, Mark, you're wrong. I compared the price of gold to the quantity of money in the world.
Mm.
And when I compared the tiny value of gold to the huge value of the financial bubble, then per unit of monetary accounting unit, gold is still not widely owned. And you talked about bubbles before. I want to tell you, there may be bubbles in many things, but there isn't a bubble in gold, because individuals, they don't really own gold. They own bitcoins and Solanas and Ethereum. You understand? The young
Yeah.
people, for them, gold is boring, too
Yeah.
boring, never moves. Whereas the cryptos, they move 10% in one day. So that's what they own.
Interesting.
And
And my final,
they gamble principally, young people gamble principally on soccer matches. Yes,
I
sports
think
betting.
it's I think Australia is per person or per capita. I think we're one of the highest betting countries in the world.
Yes,
So
for
something come up
sure,
quite
for
recently.
sure,
Yeah.
for sure. They bet on everything. Also the Chinese. So I don't think there's a bubble in the gold market. Quite on the contrary, as the price went up, people sold or took profits. I don't know many people. I know some people, say 10 people in the world, who have a substantial portion of their money in gold. I know, in mines and in physical. But among all my subscribers, I would challenge you to find more than, say, 3% that have more than 20% of the assets in gold.
In gold. Yeah. And would you say exclusively gold, or does it apply to the other precious metals like silver as well?
I would include all precious metals.
Yeah.
Some own more silver and some own more gold. Very few people own platinum. Very few. And platinum is cheap.
Do you feel
By
that's an
any
opportunity to an
measure.
extent? Yeah.
Very inexpensive.
My final thinking before we get to the end, I'm sure you have some thoughts, and every investor does at the moment, about AI in the West and artificial intelligence. And I'd be curious to get your thoughts on. I wasn't really investing in the markets when there was the .com boom and there was the tech stock conundrums globally. But AI is coming onto the market. It has been for the last 18 to 24 months. And the appetite from investors is definitely there. But is there any sort of parallels you can draw to this coming onto the markets, to global stage, and drawing similarities to what happened with the .com? Or do you feel this is a different beast in itself, the artificial intelligence applications are?
In history, we have constantly and continuously bubbles that develop in asset markets based on inventions and new trends and so forth. And many books have been written about the subject. So I don't think it's anything different than what the internet was, the dot-com boom and so forth. I would suggest that investors invest in a company that would be able to implant artificial intelligence into the brain of Mr. Trump. They would make a fortune because that's
Yeah, a bit of money potentially
a
there.
huge benefit for the world. If he could operate with some intelligence, it may be artificial, but with some intelligence.
Oh my! I mean, the politics side of it is a whole different podcast, and I tend to stray away. But for listeners and viewers, and you have a substantial following, and as I said at the outset, you're the founder and editor of the Gloom Boom Doom Report. How can people follow you and engage with you? And you do a monthly blog that goes online that people can read. But how else can people follow you and potentially exchange
I
conversations?
have no blog, but I have a report
Hmm.
called the Gloom Boom and Doom Report, and I have another report called the Monthly Report, and people can go online and follow me on www.gloomboomdoom.com. Gloom Boom Doom is all one word, gloomboomdoom.com. Or just give in my name, Marc Faber, and then they can subscribe.
They can find your content,
and they can find us on YouTube interviews or whatever. I mean, but I'm not, of the view that people like me add a lot of value to investments. I mean, occasionally I have good ideas, and then occasionally I also have bad ideas. I mean,
only human.
I don't want to say exaggerate the merits of my services. I think if someone wants to learn about economics, he will learn more by subscribing to my report for 1 year than by going to university. That's for sure.
Well,
About
very
economics,
interesting.
but he has to do some. He has to do some homework because he has to look up a few things. Because for someone who is not involved in economics, some
complex
themes are difficult to understand. So he has to look it up.
Yeah.
But that's easy nowadays with Google.
Well, and even now, generative AI giving you a summary then and there. Yeah. But I feel in conclusion, we covered a lot from, currency, bonds, stocks, reserve banks, market outlooks, residential. A hell of a lot has been covered in this short period of time. If there's a way to summarize your thoughts and what investors could and should be considering as we accelerate into really the next half of this year quite quickly and into the next, what would be some of those points that we talked about that you urge people to remember?
Yes, there's only one point I think that people should focus upon. If someone is in investments and he hasn't made any money over the last 20, 30, 40 years, he's made big mistakes. So I would warn people, it's now late in the game to think I'm going to make a lot of money. The thought people should have is the last 30 years in terms of investment have been unusual because everything went up and huge gains were achieved. Whoever owned gold, whoever owned a house in Australia, or in Vaucluse, ideally, or whoever owned stocks, the Dow Jones or the S&P, he's made a lot of money. And now the rules of the game have changed. It is about losing the least. That if everybody loses 50%, you only lose 20%. then relative to everybody else, you become very rich. You also lost, but you lost less
But not as much.
the average person. So that is the frame of mind I have. I want to avoid losses. And for that, I diversify.
There we are. Well, I very much appreciate speaking with you, Mark. It's always plenty of ground covered, and it's honestly great to do it face to face. But as you said at the beginning, you're based out of Thailand, and I'm sitting in sunny old Perth. But yeah, I appreciate
Well,
it.
you're welcome to come to Chiang Mai one day. It's also sunny here. It's bloody hot.
But yeah, thank you so much for taking the time to speak on the show, and yeah, looking forward to touching base with you again and seeing what evolves. So thank you very much.
Sawadee krap.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.